The state of the firm. Investment in human capital, and that's why it was so important to bring up 4 of the 8 of our associates. You know, Harmony just joined us recently. Frank Fazio, our portfolio strategist, joined us last May, almost a year now. Frank has 16 years experience, 13 with ACO Goldman Sachs, which is a pretty large national company. And Frank has just been wonderful helping us with our investment selections. He does a lot of analysis. He recently became a certified financial planner. Marty Shields, everybody knows Marty. Marty's been with us now almost 5 years, certified financial planner. Ryan has been with us almost 5 years, certified financial planner and CPA. Marty is also an accredited investment fiduciary, which we'll talk about later, why it's so important for us to act as a fiduciary. So our investment in our human capital is pretty good. We have probably expertise that's second to none in the Capital Region area for sure. There's not many investment firms, wealth management firms that have the expertise that we have. What did I do there, Ryan? Oh. We also invest heavily in technology. You know, we've been paperless for now 17 or 18 years. We have a client portal. I'm not sure how many of you use the client portal, but it's only getting better. And it's really technology that's second to none. We've invested heavily for our clients to be able to have just about any information you could ever want on your investment portfolio and your holdings, tax reports, whatever it may be. With this new client portal, it's just getting better and better, and I think you'll like it. If you haven't been on it, please call the office, learn how to get on it, because you know, a couple clicks of the mouse and you have a lot of information. Soon to come, we're going to have an iPad app. Everybody needs an iPad app, right? So soon to come, we're going to have an iPad app. Investment tools, and Frank will go over some of the tools that we have, some of the bells and whistles. I guess what I'm saying is our investment in technology allows us to service the relationship, to be able to give you value-added benefits. It also allows us, because I have a saying in the office, every one of you, all that we do is great, but you really engaged our services for us to manage your finances, to take the emotion out of the decision-making process. And with all of this technology, we're able to manage our clients' assets. I don't think, Charles Schwab says we're in the top 10% of all wealth management firms in the country, and I believe that. With the expertise that we have with human capital and the technology that we have to be able to put together the portfolios. I know we've been emailing you a lot lately with our why we're doing this, why we're doing that. A lot of you reply and you really like that. We're just going to do more and more of that. So our investment in our technology is as important as anything. And our business continues to grow. As you know, we're very selective about how we grow our business. We don't want to have 1,000 clients. We could easily. We put some controls in place so that we are careful about how our business grows. We invest in our human capital, broaden the team as our business grows so that our clients always have the level of service that they come to expect with us. And right now we're managing over $350 million, actually as of this morning, almost $370 million of clients' assets. And that's something, as I said a few moments ago, that I don't take lightly. When you put your trust in our services, it's business to us. And it's business that's important for you to put that trust in our services. It's why 100% of my and my family's money is invested exactly like every one of you. The only difference is I'm invested in our growth portfolio, which is our most aggressive portfolio, because I'm comfortable with stocks. And some of you may be in a more conservative portfolio, but we own the same investments. I wouldn't have it any other way. You know, when you look at who we manage money for, most of our clients are individuals, families, but we also do on the institutional side, we do a lot of endowments and not-for-profits, and we had a meeting this morning and we talked about it. With a lot of not-for-profits and endowments, they make you go through so many hoops that you have to jump through in order to, do business with them. We've had 6 not-for-profits and endowments in the last few months, and we were chosen, and believe me, there are some very good wealth managers locally and nationally that were looking to be successful with these organizations. We are 5 for 6, meaning that 5 organizations felt that through our RFP process, through all the information that we share with them, they felt the most comfortable with us. The 6th is actually going through a capital campaign. They won't be making their decision till summer. But I guess what I'm trying to say is we really have we're a boutique firm, but we're a boutique firm with a lot of expertise, and that's just a feather in our cap for our whole team for us to be able to do that. The Saratoga office, for those of you that, and I know we're in Saratoga now, a lot of you drove up the Northway, but we opened our Saratoga office, I think I opened it about 10 years ago. And last year we actually doubled the size of our office so that we can help better serve our clients, and we are happy with that. We're right on Broadway across from Starbucks. So for those of you that see us in our Troy office, feel free to come up to Saratoga. It's a great place to be. It's the summer place to be. And we have parking and so forth. So if you ever want to mix things up, see us in our Saratoga office. To round things out with the level of service to our clients, as I said, the minimums that we have, we try to control the growth of our business. We don't want to have 1,000 clients, and I hope you appreciate that, because we only have so much time to go around, and we want to make sure we give each and every one of you all the time that you need and want. The investment approach, and I'm just going to go over this quickly because I know most of you know it. Marty, Frank, Ryan, and I serve as our investment committee, and we meet every Monday. We talk about every investment that we own. We review it, we decide whether we want to stay in it, we decide whether we want to underweight or overweight different areas. And as I said, you've seen a lot of emails over the last several months explaining those decisions that we come. Our returns have been pretty stellar, I think, because of all the thought that goes into how we manage money. Our portfolios are predominantly exchange-traded funds, which we truly feel is the best way to invest money. You've heard me say this before. If I wanted to overweight technology back in the year 2000 and I picked Microsoft rather than Apple, well, Microsoft just hit the high that it hit back in the year 2000. Apple has just been going through the roof. So we'll use a technology exchange traded fund because we like technology. We're not smart enough to know which company, and I think you've seen that. Yesterday, Target lost 12%. Great company, great store, but you can't just individually pick stocks. So very seldom will we. Every once in a while we will, but exchange traded funds is the way to go. We act as a fiduciary for our clients. I've been in business for 27 years. I've been helping clients since 1987. I was around for Black Monday when the market dropped 23% in one day, and it's been a long time. But about 1993, I decided to change the way I did business. I didn't want to sell investments any longer. I didn't want to sell mutual funds and annuities and get paid all those commissions. I felt there was a conflict. So 93, I interviewed with Charles Schwab. I decided to choose them. In 1995, I truly changed over the way we were doing business, and that's when Bouchey Financial Group was incorporated as an SEC registered investment advisor. And that allows us to really manage your wealth with no conflict of interest, because to us, whether we invest your money in stocks, equities, or fixed income, FDIC insured CDs or bonds, all that matters to us is what's right for you. What's right for you as the client. What do you need in your portfolio? We employ strategic asset allocation, which Frank will talk about later. We manage risk. A lot of times you hear us say that. We'll add risk to the portfolios. We'll take risk away from the portfolios. That's something that we pride ourselves on. And not all of our ideas work out, but you can be rest assured that every decision we make, we think because it will work out. And if something doesn't work out, we won't feel bad about making a change in that. Sometimes you'll see us get into something and maybe out within a short period of time. It's because we feel there's a better place to be. The balance, between the strategic asset allocation, risk management with tactical themes, your portfolio is well structured. I'm just going to go over this. How do you work the, oh. So this is one of my favorite charts of all time. There's going to be a couple others that I'll go over at the end. People get afraid of the stock market. The stock market's not a scary place long term. On the radio Saturday, I talked about this. Every one of our clients is really a long-term investor, because any client who needs money over the next 2 years, we carve what they need to take out, put it aside, carve it out in a conservative allocation so that if the stock market were to correct tomorrow, we don't have to worry about it affecting their retirement plan for 2 years. We have 2 years to be able to manage the rest of the portfolio. And over time, no matter what has come down the pike, when you think about all the things that have happened going back to the early 1900s, whether it be world wars, Great Depressions, other regional wars, stagflation, Black Monday, which I just talked about, tech booms, the global financial crisis, terrorist attacks, the stock market always recovers. And I don't think anything's going to change. I think there's enough history in the stock market to know that if you have time, it will recover, it will come back. And this is why we're not afraid of stocks as an asset class. And I think a lot of investors get scared because they think if the market were to crash tomorrow, and I remember last year at this time when the stock market was down, it opened up, Ryan will be talking further about this, but the market was at its low point last year, right the day before our State of the Economy. And I remember saying the only time you lose money is when you actually sell out of your investments. If you don't sell out, it's just a paper loss. And the stock market will do what it always does, and that's usually advances. But I also guarantee you that you will lose money, because stocks don't just go straight up. As you can see, stocks also take a baby step backwards before they advance forward. The other chart that's pretty interesting, and this is where I think our value comes in. We get paid to take the emotion out of the investment making decision. We make decisions that a lot of investors couldn't make on their own because they're thinking it's their money. How do I do this? How do you buy when there's so much volatility? Volatility is actually a beautiful thing if you use it to your advantage, which we do. So this is just a chart that goes over several asset classes. I'm just going to point out two. A 60-40 portfolio. So if you had 60% of your money invested in the S&P 500 index, 40% invested in the bond market, over time, this goes back 20 years, your average return year in, year out was 7.2%. If you had 100% of your money in stocks, it was 8.2. So that 60-40 mix is a pretty good mix. But the average investor only had a 2.1% return because they make decisions that aren't always right, and they can't make up for that. That's where our best value comes in with your relationship, is making those hard decisions. So if you started with $100,000 20 years ago in a 60-40 portfolio, today you'd have about $402,000. The average investor would have about $152,000. And I think that's why professional management is so important.